Is it the season of the bull? Hey, everybody. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Tony Greer, editor of the Morning Navigator. Hey there, Tony.
Maggie, what's happening?
It's good to see you. So much is happening. We were both saying I feel like I should be at the end of the week because I'm tired, but it's the beginning of the week. But that's kind of where we are. We are in the thick of earnings season. We're going to hear from a bunch of consumer names this week. As well as just across the board, pretty cross sector. Tech and chips once again leading today. The Nasdaq up about a third. We did have S&P that wasn't quite as strong, and Dow is actually down, Russell down. So you see sort of a little bit of a bifurcated market, but we haven't caught up because last time you were on Talking Markets, you were on with Jared. So how are you feeling about the market here?
I'm bullish. The market's look and feel great. The seasonality is about to kick in. Like I jumped out of bed this morning because it's the first trading day in November, and November to April is the most bullish 6-month period for the S&P. It's up 76% of the time for a gain of 7% on average. I love that November is seasonally one of the best months of the year. I love that the November-December combo is seasonally one of the best two-month combos of the year. And we are set up for that kind of price action, right? We're chasing the Trumponomic bull markets. There's about a dozen of them. We can pick which one we want to talk about. Right now, the rotation is morphing, and the S&P is not giving up any ground, as you can see, right? For the first 9 months of the year, we had gold and industrial miners up and to the right, setting new records every single day. Silver finally caught up. We named the trade the Debasement trade, and that was the end of the Debasement trade for now. So we've got the highs of the year, in my opinion, in gold and silver, almost without a doubt. And now we're going to consolidate for a little while, And what's interesting, I was worried about the stock market if gold miners and industrial miners were going to back off. That's a big chunk of the leadership, although not a big chunk of market cap. I understand, but sentiment-wise, that was a risk. And the bull in you gets rewarded because now we've got other sectors that, need to be bought, tech, like you mentioned just there, tech, semiconductors, the AI trade is back rolling, Nvidia and semiconductors, making new all-time highs almost, in the last couple of days here, or at least pressing the highs. Amazon with another multi-sigma extension on this deal today, a $38 billion deal with OpenAI for Nvidia chips. It's like if Amazon, first they beat earnings with all their robotics efficiencies and things like that. Then they ink this deal. It's a little bit more of that circular AI financing that's going on. But the stock loves it, so I can't argue with it. You know what I mean? Like if they were going to say there was something bad about it, they'd sell the stock.
Yeah.
But they're buying the stock. It's the second 2 sigma extension higher. Amazon was really consolidating around 225 for, call it, the last 5 or 6 months. And if these two headlines, the earnings and this deal break it out of that range, I'm a believer that it might rally for the next 5 or 6 months. So let's see what happens with Amazon. And it's just another potent cocktail when you've got to hand off to another sector. Now technology's on fire, and they can't get enough AI, they can't get enough of Mag 7, and so if gold holds in here and then the miners catch a bid again, then you'll get the whole flywheel going. And what's interesting is that there are some interesting commodity moves on the tape today. Well, not today, but oil seems to be basing in the high 50s here. Like it's kind of been off my radar for a long time. And I like the price action because we just had a dip and dunk to a new low and right back into the range. So that's something that kind of catches my eye. And now that we're kind of recovering 60, I feel like oil may have some potential. I also don't want to get caught saying, you idiot, you just watched gold break out, copper break out, grains broke out, and you didn't buy oil for the breakout. You know what I mean? Like I can't let that happen. So while I'm not loaded up with oil risk, I've got my finger on the trigger. And I have started just moving a little bit of money toward that space, like placeholder stuff. But if it comes alive and there is a turn in the trend, then at least I have a position of strength to start from, even though it's small. So
Yeah.
there's so much going on, Mag, like I don't even know where to start with all the Trump bull markets. There's like a dozen of them out there. So where
I
do we
know.
want to start?
And I wonder, how do you feel about, uh, I there had been so much talk. You kind of can't have a conversation without someone expressing concern about an AI bubble, right? I mean, that people have been really negative about Mag 7, and I know that you always say, like, you got to look at what's going on the screen, though. But how are you? What are you hearing, first of all? And I should say hey to everybody who's joining us live on Substack and YouTube. We're jumping right in because there's so much to talk about, but put your questions in as always, and we'll get to as many as we can in terms of what you're watching or you're wondering about. But we did have this sort of overwhelming concern about this AI bubble. How are you kind of squaring that with the price action you're seeing on the screen?
We're swimming in the bubble. The bubble's going on, right? The bubble is being blown, and we're going to have to get this bubble a lot bigger, I think, before we find a catalyst that pops it. It's just hard for me to just kind of look at this market and say, okay, it's a bubble, so sell it. You know what I mean? Like, I still kind of have the Warren Buffett idea, which is, if you show me a bubble, I'd rather buy it. You know what I mean? And I kind of feel like that's what we're set up for, especially, now that the metals trade has cooled down, technology is rallying again, yields have backed off for like the third consecutive month in a row. And the descent has been slow, but it has been steady. And, that's one of the Trump objectives that we spoke about in, the last several talking markets, where we're like, I just don't want to fade the president getting rates lower, because he's going to. And so that's what's happening. That's putting a little bit of life into some of the value stocks. Hasn't turned the building sector yet, but I think that that's something that might be a 2026 trade. And, like I said, it's a round robin of bull markets going on. So it's very difficult to keep the S&P down or the NASDAQ down when that's happening, and they're clawing for new highs. So yeah, AI could definitely be in a bubble. Yes, my eyebrow raises every time I see more circular financing with, the same names buying into each other. That's definitely a red flag, but I'm not in the position yet where somebody's making me pay for AI and it's sort of, all right, get your checkbook out, or no more AI for you, Tony Greer. You know what I mean? And so I feel like if they're still going to let us have this for free, then the bubble can go on, until we figure out a way for them to monetize it and finance it. I can just know that the capital wants to go there. I can be on guard that it's a bubble if things turn south, but then you need price action to say something to you, right? We're going to see large magnitude losses, and several of them in a row. And that's what the bubble popping is going to look like. It ain't going to look like this, so I don't sit it like, I guess, Maggie, I've had, if you know where you are in this trade, you can be nimble with it, right? Today doesn't look like a day we're going to pop the Nvidia bubble, right? It's 5 trillion in market cap strong, and it's trading at an all-time high. Like, not today. It's not going to happen. So that's where, okay, I can play these from the long side. The coast is clear. And I'm fortunate enough to kind of have a smell when lightning strikes and everything changes, right? And you hear the thunder roaring, and it's like, that's when I do more trading, and get out of the trades that I'm in and lighten up my risk. But that's not what we're seeing, right?
Yeah.
We're still seeing the round robin handoff of, oh, there goes this sector. There goes uranium miners again. There goes another. And it's all headline driven, right? We get, AI, we just inked a deal with the energy department, inked a deal with AI. So it's like there's all kinds of deals that can still come through, and they're all providing tailwinds to the tape. So I'm not going to be the one to stand in front of that. I'm going to kind of try to go with that. And I'm not telling anyone to go home, limit long semiconductors on the highs.
Yeah.
I'm saying, from a trading perspective, this is the environment that we're in. We can be long those still. The bubble is still being blown. The catalyst to pop it is not around at the moment. So
yeah. And I know that when you say at the moment, and again, you're, if you're participating in the market at this time, you have a framework, you got to pay attention. You can't go off and not look for a few days because, as you say, things could change. So I know for you guys, you have that sort of spidey sense that you get a bad feeling and you've got a lot of things you look at to give you those signals. So that's really important. This is not a set and forget right now.
Exactly, Maggie. We just had this pullback in the NASDAQ and the S&P, sort of pullback in October to the 50-day moving average, right? It came with gold backing off from the highs and that whole trade kind of cooling off just a little bit. But what happened was when the S&P and the NASDAQ backed off into support, the metals and industrial miners went down. And those couple of weeks, they bought energy, right? They bought retail, they bought this, and they bought semiconductors, and big tech rallied. So it's like, okay, when you see things like that and you don't see the emergence of agnostic, all sector and all asset class selling, you can look at the tape and say, I'm fine with that. I'm fine with that. I'm fine with that. That looks normal, right? And so without the VIX, sticking its head up into the 30s, everything can change and morph a little bit, and you got to be able to go with that.
Yeah, makes sense. This is a really good question from Gurdeep. What's your view on Meta? It got punished on Friday as soon as it announced their CapEx, similar to what happened with the metaverse announcement a few years ago. And it was really telling because all the other Mag 7s are getting rewarded and doing really well. And Meta was kind of the standout that did not have the response I think it was hoping for.
Well, Meta was, Meta and the social media sector were almost at the top of the leaderboard for the majority of this year. And with this huge pullback in Meta, have given that up. Now, I am not a single stock expert by any stretch of the imagination, right? But I do know that for the beginning of the year, there was a lot of buying in Facebook and that the social media sector was strong. Now we're curling over below the 200-day with that news on the tape. That looks vulnerable to me because we gave up, in 2025, we made a high in Meta at 740, tanked into the tariff discussion, and then we made a new high at 800, and now we're all the way back to 630. So you're going to draw a big old blow off top at the top of Meta, which it just formed in the last 2 or 3 months, and say, oh, that could be a problem. So like I said, I'm not going to claim to fully understand what Mark Zuckerberg might have in his back pocket tomorrow morning to turn the stock around. But I'm going to say technically it's in trouble now. And I agree that this is one Mag 7 stock that I would not go near with a 10-foot pole right now.
Yeah. So I love that question because this is just what we were discussing. You can't sort of just have this overall, I'm going to buy all tech. You do have to kind of strategically look because obviously people are pulling apart the threads a little bit on this AI story. And I'm thinking it's going to continue to be like that, even though there's huge momentum for those that deliver. You've got to pay attention to that. One of the things, we have some great questions coming in from on all kinds of different things. And we're lucky that you watch so much of the market. But I just want to say that you got something special planned next year, which I love because I feel like it's this kind of market where you have to pay attention to everything. You just said there are like 12 bull markets we have to pay attention to. So fill us in on what's going on.
Nashville, February 19th and 20th, Mag, TG Macro Conference 1. I'm really, really excited. We have, first of all, beyond blessed that you're going to join us and be my MC, hostess,
right,
and organizer for this. And that's amazing. And then we've got Jared, we've got Doomberg, I've got Sir JJ coming to speak.
Amazing.
And I've got two speakers, maybe more in my back pocket that I haven't even announced yet. And to me, those are the big hits of the conference. So we're going to cover a lot of ground. We're going to cover in depth on the metals and commodity side, where I'm going to be the big stock speaker. Somebody's going to probably talk about something in the technology space. I'm going to leave it at that. And man, we are going to have some fun in Nashville. I'll tell you that.
I am so excited. It's going to be awesome. So, maiden voyage, we like to say. But I feel like, very seriously, I feel like I just came, as you all know, because we've been having, Tony was one of our guest hosts. We've been having some fill-in because I've been going from conference to conference. It's just been very busy. and the benefit of being in real life and having an exchange of ideas, being able to connect with people and ask them and have a variety of opinions and have people sort of debate what's on their mind has been so invaluable. I just learned so much myself. I just came from a car conference, an auto conference in Detroit. And it was amazing. And so I think there's like so much to be gained from that kind of experience. So I'm so excited that you're doing this. And I'm so excited that I get to hang out with everybody in person. It's going to be awesome.
It is going to be great, Maggie. And I love the point that you make about, the human connection, because I get really, really vitalized in the beginning of the year because I speak at a bunch of conferences in January, and it just, we're meant to convene with other people, right? And we're meant to be community people. And it's so uplifting to get out and meet people that maybe you've had a relationship with through email only or through your DMs. And, you finally get to meet those people, and they've become some of my longest time subscribers and best friends in the business now. Yeah. So that's really exciting. And I'm hoping to just create more of that in Nashville. It's going to be fun to get kind of my crew together and do a conference my way.
Exactly. Yeah. I'm super excited. And you're right. It's fun. And listen, I hope we get some of you there because you are so smart and what you share and the, the ideas that you have on markets. It's great to share it with each other. So not just listen to the guests that Tony has coming, but also be able to swap stories and meet up. I know you all talk in the chat. So super excited for that.
It's going to be a great networking event. And Matt, if I can, I just want to address a question that I see in the chat there about whether Bitcoin will underperform gold and S&P into year end. I think that's a great question. That is so top of mind for me right now, because quite honestly, I think that the gold rally for this year only is over. Right. Like that was, we saw such euphoria into the gold rally, and gold is something that like I've never seen euphoria in my life. So that was really cool to witness. And it was really cool for, Jared and I to point out while gold was on the highs, we were saying, at some point you're going to come in and it's going to be down big. And like, we got that turn like 2 or 3 days later. And now I just feel like the S&P is set up to outperform gold, silver, and Bitcoin. Right. Gold's got that peak at 4,400. Silver had everybody and their mom reeled in above $50, saying, oh, you know what? This is another generational breakout. That old double top at 50. We're through that. And I went with it as well, because I can't not be long silver if it goes from 50 to 75, but I can buy it at 55 and sell it at 45 like I just did. You know what I mean? So I lost money. I lose money all the time. That doesn't bother me. But what's most important is that the sentiment got so hot at the highs there that gold became a security again. Right. For a little while, gold was everybody's magic carpet ride. And while I was long making comments saying, man, this thing's getting stretched here, people are coming at me going, you don't understand. This is the debasement trade. This is not going to stop. And I'm saying, this is a security, right? This is like everything else that I've been trading for 35 years. Like, what's different about this? What are you talking about? Right. But for a little while, they had me brainwashed.
Right.
They had me brainwashed. And I'm like, God damn it. Are these people really right? Like,
it's different this time?
Like maybe it's different this time. Right. So, but bottom line, it's never different this time. Those are good highs for the year in gold and silver. Bitcoin has got a nasty double top at 125K and is now below the moving average, the 200-day moving average. I'm not going to say that either are going to collapse. I don't want people to come at me and DM and say, why are you bearish metals and Bitcoin now? I'm not. I'm saying that the S&P is set up to way outperform them into the end of the year. And that's a trade that I have to make sure that I capitalize on if I'm right.
Yeah. And this is why I think, especially, we're going to get through the holidays. It'll be great to hear from JJ. Alyosha on Substack. I know many of you follow him. Amazing. And has seen, this is where experience matters, right? He has seen all of this before. So it's going to be great to answer another question from Ian Doomberg. Yes, Doomberg is speaking at the conference. I think someone asked you, Tony, if he was going to wear his chicken outfit. No, he's
Doomberg
not.
Is going to be at the conference, and there will be maximum security around him there, but he will be there in person. Absolutely.
Which is going to be so wild because I mean, we don't even know what he sounds like in his real voice. So that's
I
going to be
know, right?
absolutely hysterical
I know. It is
to
gonna
hang
be
out.
funny. It's gonna be funny. Meanwhile, I listen to him as the chicken, and I'm like, I wish we could just talk like regular on the
Oh, I
phone.
know. We
You
always
know what
get
I mean?
comments. I know he's married to it, but we get comments like, why do I have to listen to it this way?
That's fine.
Yes, Cosmo, I think you're right. No cell phones allowed. Security and no cell phones.
That's right.
But it's going to be worth it. By the way, before we take some more of these questions, we put a link in the description because there's an early bird special for the conference. So go ahead and take advantage of that. And book your ticket so that you make sure you clear that time. I think it's February. What are the dates?
February 19th and 20th in Nashville. We are going to add a speaker on November 15th to the roster, and then another one on either December 1st or 15th. And the price is going to go up with each speaker, and everybody's going to understand why. So
Okay.
I'm kind of trying to lay people up for a trade here. You can take my advice and get into the trade at $9.99, or you can
That's so
wait a
funny.
month and buy into the trade at $1,500. It's up to
That's
you.
so funny. Super cool. And we'll continue to drop that. But I've got to start shopping from my boots, I think. If I'm going to be in Nashville. Okay, let's get to some of these questions. Daniel on Substack. Hearing you looking at the miners, do you think that Barrick has topped? And on the energy side, what's your view on Cameco?
Well, Barrick's got the deal that it's negotiating. So yes, I kind of do. Similarly to the way gold, I think, may have topped, I have to think that Barrick may have topped with it. The stock is hanging in there. The trend is still intact. It hasn't broken below the 50-day. Same thing with the gold miners. I just think that they're going to be sideways for a little while. So, and that doesn't mean, I just don't think that they're going to be able to perform in the last 2 months of the year down the stretch with this peak in the rear view mirror, the way some of the other sectors are set up with fresh breakouts. Semiconductors, whether we like it or not, kind of just broke a new level. Nvidia did the same thing. So, and Amazon did the same thing. And when I see the tech names like that starting to break out, I look back at the gold miners and say, up 110% on the year. If you came in with them, you should probably think about taking a little bit of profit around there somewhere, right? We have to see how this plays out. We got the street continues to come to back gold now. It's definitely on everyone's radar. The street wants the orders on their desk, so they're going to try to come out every day with something new, another upgrade, this and that. And we'll see what happens in price. I just feel like we hit max short-term euphoria when everybody was telling me that 91 RSI on the gold monthly chart doesn't matter anymore. As it turns out, 91 RSI is still overbought, and that's why we backed off from 400 to 4K. Yeah. So we'll see what happens. I mean, these trends are all still intact. My bias is just that they're probably going to be quieter money for the next couple of weeks / into the end of the year. That's my best guess.
Yeah. I was talking to Warren Pies not too long ago, and he was sort of bringing up the point, and I think it's an excellent one, that you can have these big sort of secular stories, which I think is what's going on with gold, and then you have cycles within them, right? That you have to pay attention to.
Totally.
You cannot just look at one without the other. And I think people got really caught up in the secular debasement. And you can lock in on that and believe that is absolutely right. But that doesn't mean that you're not going to see cyclical moves. And he was making up the same exact point before it turned.
Depends where you are in the trade, right? Silver can go to $80. It might go to 40 first.
Right.
That's not outrageous in the slightest,
Right.
So.
Right. So really, really important. And you can find my conversation with Warren on our Substack. Josh saying, Maggie, please ask Tony about this exhaustion candles. Microsoft, AMD, Amazon, Google, even Palantir here in the big gap ups, and at the end of incredible rallies that get sold. Textbook exhaustion, he thinks.
Could be. AMD doesn't look exhausted, but Microsoft, I totally sympathize with. I saw the double top form. Now we're back into low 500s with a double top at 550 in the rearview mirror. That certainly could be it for that breakout. Palantir, let's see what that thing looks like. That's not a stock to fade by any stretch of the imagination. To me, that thing's breaking to new highs. Same thing with AMD. So I hear what you're saying on Microsoft. There's going to be some tech formations like Maggie just went over within this bull breakout. Maybe the double top in Microsoft holds for a little while and we get, a 10% pullback in that stock. But with Amazon breaking out, a lot of the other tech stocks look great. Apple's back to new all-time highs. Google looks good again. I mean, it's like, it's just traffic that I can't fight. And so I
Yeah.
don't.
Yeah. Hi, Blind Squirrel. He's in the chat. He has a great conversation. He's our guest host on Wednesday. One more event I got to get through, people, for the end of the year. It's been crazy, but I'm so excited for his conversation with Eric. So make sure you tune in for that. We're going to get the global view, which we need. Cosmo bringing up this really interesting point. Crypto miners are exploding as they pivot from mining Bitcoin to providing compute for AI.
Could be a great trade. That's a little bit deep into the, sectoral AI space for me.
Yeah.
But sounds like it could work.
We know we need compute. One thing that we haven't talked about yet is that for all the bullish seasonality we're entering into and the momentum around some of these stocks, if the earnings continue to deliver, that's an if, but so far they pretty much have, we're not getting any economic data at all, right? Like the government shut down.
Yeah.
So do we have a read on what's going on with the economy, or is that sort of a blind spot right now that we have to kind of watch out for? Because if we start to get some negative reads, or if there is any kind of problem with growth.
Maggie, it's always been for me a game between the sort of economic channel checks that you do with your own eyes versus what the Bureau of Labor Statistics tells you. So I don't know. I guess I don't miss the data really. You know what I mean? Like,
Yeah.
I guess it gives you a better beat on the economy, et cetera, et cetera. All the recession bros are back out saying that there's one coming, et cetera. But I mean, it just goes to show you that the market certainly isn't hanging its hat on every piece of data out of the US Gov right now, right? Like they look around. They look around and they say, okay, the economy might be a little bit slower growth, but it feels okay to me. And I've got these dozen bull markets to chase. Let's get involved. You know what I mean? So that's kind of how I feel like portfolio managers are looking at the economy that way.
Speaking of portfolio managers, this is an interesting question from George. Do either of you see a risk of degrossing led by funds locking year-end profits before the traditional Christmas rally? Staples might get some parked money.
Yeah, so I think that's one of the reasons why I think the gold and miners highs are in this year, because I think that if we get a big rally in stocks that have pushed back towards the highs in those, and people will be like, all right, I'm loaded to the gills. I can make a couple of sales here because I don't know if we're going to break new highs without gold ramping up again. So that's why I do believe that, some of those sectors will be capped, but I just think that there'll be enough buying to keep them consolidating or trading sideways. I don't know if we're going to see a full on year-end fire sale in any of these. That's all.
We talked about oil, but JJ was wondering about nat gas as well. Did we talk about nat gas? I don't think
we haven't. And it's been so far. I've been so engrossed in all, I'm kind of in the uranium trade. I'm in the metals trade. I'm kind of chasing the oil trade lightly now. Natural gas looks like it can go, but I have like the least confidence in it. And I mean, it's the whole energy, all the energy stuff is going, right? Solar stocks are going, E&P stocks are kind of picking their head up a little bit. This is going to be one of the themes that's with us for, the Trump administration. The AI data center power is like affecting everything now. It's going to affect all of the energy commodities because we're going to be sourcing energy every way we can. So is natural likely to break out? Probably. Am I likely to be on top of it? Probably not, just because I'm neck deep in a couple of these other trades here. I got an eye on it, but
so that brings up a really good point, which is like, and I think you've discussed this before, as well as, a lot of seasoned traders. Dale brings it up. It's okay to not have, you want to watch that you don't have too much on your pad, that you can't pay attention to what you need to, right? I mean, I think that's something that you've said over and over again. When you feel really strongly about something, you kind of focus on that as opposed to jumping on everything that's out there.
Yeah, and you can only get that feeling about something if you know it intimately, and you can only know something intimately if you have like a finite list of things to follow. So while that list kind of morphs over the course of a year, you get pretty deep in with 10 or 15 securities, and when you get when you know them as well as you can get to know them,
Mm.
you're just better off risking your money in the securities that you're used to trading and in the narratives that you're used to trading. You know, like what inning it is in that narrative, you know, what positioning is like, you have a read on sentiment. And it's hard to say, oh, that's a breakout. Let me take some capital away from these trades and go put it into this one now. You know, like my brain certainly doesn't work like that either. I have a really good noise cancellation policy. I love to see other trades going on while I'm focusing on one of my own here.
Mm, mm. Is there anything that you don't like, or something out there that you feel skeptical about? I usually ask, like, what do you like? You just gave us a really good rundown of what you like and why. Is there anything that you're a bit more cautious about that you feel like some people are
I think
keeping on?
alongside the idea with the AI could be in a bubble, then maybe private equity, a couple of private equity stocks have some downside. You know,
Mm,
BlackRock looks a little bit vulnerable, and Ares and TPG and KKR, like they all have these secondary lower highs in the last, you know, half of the year, and then a big slide.
mm,
So those charts are all compromised. And if they're, you know, if PE is going to wind up holding a lot of the bag on AI stuff, that stuff to me is vulnerable. You know, you hear rumblings of regional banks having issues
mm.
with loans, and that's something, you know, we have a K-shaped economy that should not shock anybody, right? There's going to be defaults along the way. There's bull markets and bear markets going on simultaneously.
Mm.
So, you know, I feel like PE and maybe regional banks are something that I would go right to if there was like a big sell-off or a big market scare day, and I probably would gravitate to them and say, okay, let's sell some of those and see if the market can take it. But I'm a
Yeah.
much better bull market trader, Mag. I do much better buying things that I think are going up than selling things that are going down. Shorting things is just a much different degree of difficulty. And
Yeah.
in fact, it's a totally different sport, if you ask me. So there you
Good
are.
good point, but it's good to know what you're watching for signs of trouble. Like, where if you think there's cracks, like, that's what you're gonna keep your eye on.
Yeah, I think there's another, you know, if you look at like Kraft Heinz, right? A staple. They make, you know, all ketchup and Oscar Mayer, and the stock is very clearly in a secular downtrend. And, you know, a lot of it is inflation. But I think the majority of it is like the world is changing their dietary habits or at least their awareness. You know, I think like, whereas 10 years ago, you wouldn't have young people that were super aware about seed oils and
Yeah.
about how much sugar is in a frappuccino.
Yeah.
Now, like the next generation knows that stuff. Like the next generation is running from seed oils and
Yeah.
saying, like, no, not too much sugar. We
Yeah.
don't drink a lot now, not too much sugar in the diet. So I kind of feel like those are some secular trends that might play out.
Yeah.
I'm not going to throw that out as a great trade idea. That just looks like something to me that's going to keep going down.
Yeah, no, you're absolutely right. We have kids that are similar ages, and
Mhm.
it's a completely different conversation. And I don't know if anybody was living in New York when Mike Bloomberg was a mayor, and we were putting the calories on the menu, and everybody was like outraged about it and thought it was. Now it's second nature. These kids look at the back of everything they pick up to see
Mag,
what's in it, and they don't
Maggie,
want art dye. They don't want, corn syrup. They don't want any of that.
I lived in New York under Mayor Bloomberg and will say that it was the greatest experience of my life. I could have eaten off the ground in Washington Square Park that I lived next door to. And I was pissed off that he was eliminating tall, sugary drinks. I was like, who the hell is this guy to start governing people's diets and this and that? Now I think it's the greatest idea.
I know.
You know what
I
I mean?
know.
Like
I
it
want
just
I
makes
want calories
all
on
the sense in
everything.
the world. I don't know what to tell you, you know?
Oh my gosh. Well, Tony, this was so much fun. I'm so excited about Nashville. I'm so glad we can start sharing it with everybody. We're going to have an awesome time. So we'll keep dropping the breadcrumbs and letting people know what's going on. But hopefully we see a lot of you there in person. It's going to
Yeah,
be epic. I feel like I need to get in training for it now, though, because Nashville, I hear,
I
is a
am.
lot of fun.
Oh, I've already begun training for it in more than one way, Maggie.
Awesome. All right. Thanks, everybody. So great to start the week with you. As I mentioned, Blind Squirrel and Eric are going to be here with you on Wednesday. I'll be back with Dale on Friday, but have a fantastic week. Take care and good luck out there.
Awesome. Thanks, Maggie.